After weeks of brutal fear, with hardware wallet exploits that seemed designed to kill the idea of self-custody, Bitcoin just crossed $80,000 for the first time since May. It touched $81,000, nearly 25% in 7 days. The whole crypto market now sits above $2.78 trillion, and everyone is asking the same question. Is the bear market over? Today, we break down exactly what happened, why it happened, and whether this rally has real foundations. Coming up, the fear that shook self-custody, the explosive rebound, the 3 real causes, and what happens next. Let's start with the fear that gripped self-custody. First, the context. Fear around self-custody spiked dramatically over recent weeks. The most serious case involved Coldcard. A firmware bug from March 2021 weakened seed randomness to just 40 bits of entropy. Attackers never touched a single physical device. From July 30th, they drained between $116 and $130 million in Bitcoin from over 5,000 addresses. Then came shipping data leaks from Trezor and SafePal. Names, home addresses, and phone numbers of thousands of users were exposed. The risk of physical attacks suddenly became very real. The narrative on social media shifted quickly. Hardware wallets are not safe, people said. Maybe better to use an ETF or a custodian. Fear was at its peak. And just when it seemed the self-custody story was collapsing. Now, let's look at the explosive move higher. Bitcoin exploded. It crossed $80,000. It touched $81,000 temporarily, around 24 to 25% in a single week. The Fear and Greed Index jumped to extreme greed. Ethereum, Solana, and XRP all surged alongside. The total crypto market exceeded $2.78 trillion. It seemed impossible after so much fear. So what actually caused it? 3 real causes drove this move. Cause number 1, the US Treasury. On August 19th, Treasury Secretary Scott Bessent announced plans to at least double long-term bond buybacks, from $2 billion to at least $4 billion per operation. There was even discussion of topping into the nearly $950 billion sitting in the Treasury general account. Yields on the 30-year bond dropped from 19-year highs. The dollar weakened, and the famous debasement trade activated. Money began flowing into scarce assets, gold, and Bitcoin. Arthur Hayes said it plainly. This is the beginning of a new bull run. But there was more to the story. Here are the 3 real drivers behind this surge. Cause number 2, a historic short squeeze. In just 24 to 45 hours, between $2.7 and $3.3 billion in short positions were liquidated across the entire crypto market. Bitcoin alone accounted for roughly $1.67 billion. Over 90% of all liquidations were shorts. The open interest in BTC futures dropped nearly 15%. When shorts get liquidated, they are forced to buy. That forced buying pushed the price from $64,000 to over $80,000 in a matter of days. It was the largest event of its kind since at least 2021. But this was only part of the equation. Cause number 3, record ETF inflows. US spot Bitcoin ETFs posted their strongest week since October 2025, nearly $2 billion in net inflows. 6 consecutive days of accumulation, totaling over $2.2 billion. BlackRock led the charge with hundreds of millions on individual days. This is not just derivatives noise. This is real buying of physical Bitcoin through regulated vehicles. Finally, let's break down what this means going forward. That institutional demand gave the price support when the squeeze started to fade. So now the million-dollar question. Is the bear market over? This move has 3 solid legs: macro liquidity from the Treasury, extreme derivatives positioning, and fresh institutional money. it is not just an empty squeeze, but it is not yet a confirmed bull market either. Analysts are watching the $83,000 level as the key zone. If Bitcoin breaks above and holds, the narrative changes. If it loses the $75,000 to $76,000 range with force, a healthy correction is possible. Here is what matters. The hardware wallet fear was operational security noise. The market did not move because of it. It moved on liquidity and positioning. Quick summary. Coldcard exploit and data leaks created fear. Bitcoin reached $80,000, driven by Treasury buybacks, a short squeeze of over $3 billion, and record ETF inflows. Total market at $2.78 trillion. Is this the end of the bear market? Not yet certain, but the catalysts are real. If this analysis added clarity, consider subscribing and turning on notifications. In the comments, tell us, does Bitcoin reach 100,000 before year end? Or is a correction still ahead? Until next time, guard your keys and guard your mindset.